Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we're doing it from a neoclassical perspective, and that means that we're looking at supply and demand on the charts, and we're using that to make determinations about where this market's going to go, where individual stocks, sectors, all of those things are going to go, and we do that based on test, either failed or success. Tonight we had a test on the index that says we're probably going higher. I'll show you that in a second. This is a remake of an earlier taping where we lost voice. We didn't get a voiceover. So let's do kind of an abbreviated session here and take a look at these markets. So I'm not going to go over the opening numbers. What I'm going to do is I'm going to skip straight in and start looking at the actual indexes and what they did. So let me pop into that. Let me grab the indexes here, and we'll go to the S&P 500 to start with. So you know what you have on the charts there is you got the S&P 500. The S&P 500 pushes to a new recovery off this little retrace. Now, the thing that it didn't do is, even though it got up here to the top, this is the breakdown bar. This is the bar I told you it would be important. It didn't quite get over it. 2271.31. Well, I shouldn't say it didn't get over it. It did get over it. It didn't stay over it. It closed at 2270. So that says, okay, you come up to the spot where you expect the sellers to show, and that's kind of what happened, right? You don't quite get over it. But that's not a bad deal. It just says, okay, we got a little bit more resistance. It's going to take us a little while longer. And then the other breakdown bar is up here. So you got to go over both of those. But it looks like it's going to. And the reason it looks like it's going to is because of the Russell. So let's pop the Russell up. And if we look at the Russell right quick, what the Russell did is the Russell did get over its price points. You got this high, it's 1379. You got the swing point high, 1385. Gets over both of them today. Shoots up 1.64%. And that swing point high up there, the last one's 1392. But the Russell gets over it. And what that says is, more than likely, is that this Russell is going to break out of this range, going to break out on the top side, right? So there's your area. And you do have this one bar, 1388.53, and you're just underneath it. So tomorrow's kind of the do or die. You get over it or you stay in the range. My take here is that it's probably going to get over it, and so that's the setup. If you look elsewhere on the indexes, you don't really have anything over in the IXC or the NDX. They're both just trying to come back up to where they were. The breakdown bar here top is 54.98. And so that's the way those look. I was talking about, or I want to talk about, you know, what's going on with respect to the sectors, right? Because what happens if you think about how markets move, right? You have stocks that move sectors, right? That move indexes. And it really is in that form. And so, you know, when I'm looking at the NASDAQ, right, I got all the stocks that fit in the NASDAQ, and there's, you know, thousands of them. And those stocks, if enough of those move, they're going to move the sector. Now, it's not really a sector for the NDX. You know, there's the NDX 100 probably is the best one. The SOX, you got the semiconductors, you got biotechnology, you got those sectors. If enough stocks in those sectors move, they will move the sector. And when I say move it, what I mean is, you know, let's say we're going sideways and now we're starting to go back up. If enough of these stocks do it, they'll move these. And enough of these do it, they'll move the index. And that's how it works. And so when I'm looking at, you know, the indexes, I can peel down a layer and look at the sectors. And if we look at the sectors, they're not all equal. And that's it's important to realize, because they're not all equal. Some are moving better than others. And so if you know, last night I gave you the financials and said, boy, this is a really strong sector. If you look at the financials, right, you have this big, strong, stiff move to the upside. And then what happens? Well, typically you get that kind of move, you get some sort of sideways action, but the sideways here was kind of biased to the upside, and then it just takes off again. You never even consolidated, so you essentially went from here to here without a consolidation. Now you've had your consolidation, and now it's sitting right up here at the top getting ready to break out. That's the financials. That's a very strong sector. Now, if you look at another sector that's not so strong, for example, discretionary, right, consumer discretionary, And when I say strong, and I'm talking about on a relative basis, yeah, you made a nice big move up, but look at the pullback here compared to the financials. Another move up, and now a bigger pullback. It actually comes back and tests this again. Now, we could say that's a big, broad range, and in a way it is, but I think that, the point here is that some sectors are stronger than others. This one is not as strong as the financials. And so if I had to choose between the two, I would want to go with the strongest one. It's not like going to the department store and you want to buy something that's on sale. Something on sale in the market is usually on sale for a reason. And so you want to stay with the strong. You want the wind at your back as much as you can get it. And even though this sector, if the general market works higher, this sector will kind of get pulled along. When there is a setback, this sector will be the one that feels the brunt of it. And matter of fact, this one may not even be able to make new highs, even if the index does. Then you have something that's in between, right? And what I was given as an example there is the XME. And so if I pop over to it, and bear with me just a second, let me grab it. The XME is the minerals and the minings. And so if I look at those, and here's the chart, you have the same sort of thing, right? Big push up. This is kind of in between the XLF and the XLY. So here, this kind of corresponds to what the XLF did. And again, this one didn't hardly pause. It just went straight on up. Now you get the deeper pullback. And the reason you get it is because your beta is higher here. If you don't consider beta in your investing, you have a problem. Because some things are going to move more than others. When things are going up, you want to be in things that have higher beta. When things are going sideways or potentially going down, you want to cut some of that beta out of your portfolio. The TA Today portfolio is usually, almost always, underweight the beta. Has been for the last 6 months of the market. So in other words, if you take the market as 1, which it is, right? If you say the market is at 1, the beta of the TA Today portfolio was like 0.7 or something, or 0.6. That says that if you're fully invested and you're getting just that much kick out of it, you're going to get a 7% return when the market gets a 1% return, 0.7. But what the key is that you mix in some things that have a high beta, and you mix in some things that have very low beta, something that's less than this, and your overall beta is less than the market, but you can still outrun the market, or you can at least stay even with it. And so the thing is to mix in some stuff with some good beta. And one of the things we've mixed in recently is FCX, Freeport-McMoRan. Now this one has a high beta. It's in that XME component sector. And you can see the huge run up here. I mean, just take a look at these numbers. You went from, $9 up to 16. That's like an 80% run. And then you back off, looks like about 13. That gives you about 20-something% back off. And now you're trying to break out again. As a matter of fact, you just broke over a swing point high today. And so, this thing, if you just look at the last 2 days, it moved 4.4 and today was 7. You moved 12% in 2 days, the first 2 days of the year. That's beta. That's what beta can do for you. That's how beta can hurt you if you're too strong and long that thing. This one's coming in, if you're looking at it, it's coming into this bar. It's got to get into it. If it gets into it, it's going to go to the top. If you're looking at this as a potential trade that you might want to enter, let it get into this bar or let it retrace back into a retest regen off the swing point high, which might bring it back into the low 14s. That's how you get your entry here. As I said, we're already in this stock and in the green at this point. If we look at other things that are important, there's other stocks that are moving. I pointed out Tesla last week. So, I've given you stocks that are going to move. If you take a look at Tesla, look at the move that you got today. Look at the volume swell on that move. This is a nice big structure to the top side. And I'm looking to see where's your ABCDs. The first one's right there. And so that's your B point. Take it on up. That's a long ABCD. It runs off the top of your chart up here. You got a big move potentially happening in Tesla. This again was a stock I mentioned to you when it was pulling back here, where you could have got in on a good entry. So some of these stocks look good, or I actually may have mentioned it as it was coming over the swing point high, right, getting ready to break it. But you know, these are the sorts of things that you have to ferret out, and these are the sorts of things that the tools at TA Today will help you do, as well as me helping you do the same thing when I'm taking a look at the markets and giving you my feedback, and of course the portfolio that I give you. If you're interested in that, you know, you really should come over and check out what we do. All of this is described here on this site. You can go to the membership, you can check it out. I'd be happy to answer any questions myself or have somebody help you. Come to About Us, come to the Contact Us, and just contact us and let us know. I'm accepting applications. We're still not open for business for new subscribers, only existing members. It is a first-come, first-served basis, and it's an application process. You can't just walk in the door. You got to apply, and we take a look at it, and we try to make certain that the time that we're going to invest in you, because we are going to invest in you, is going to be time well worth our effort. And so there's an application process, and you can get on that application list by simply coming here and hitting the Get Started button. That's it for tonight. I'm off tonight. I'll see you next time. Have a great one. Good night.